Hey everyone, today we are sitting down with the Multifamily Socal team to discuss Q1 multifamily transactions within Long Beach and the 605 corridor. Today we are sitting down with Trey Mitchell and also Sean Farag, and we're going to dive in on what happened in Q1. So thanks guys for being here and to talk about the market.
Absolutely, thanks for having us.
Thanks for having us.
Of course.
Appreciate that.
So we put together the stats of what took place in your respective markets. Sean covers the 605 corridor for the team, and Trey heads up Long Beach, covering the entire market for the team as well. And we're just going to dive into a summary on the value indicators and sales stats within the marketplace. So let's start off with Long Beach. There was between 10 and 100 units within the marketplace. There was a total of 13 transactions that took place in Q1, of which there was a total of 305 units that transacted for an average of $80 million. Now the average price per unit was $275,000 per unit and $422 a foot. So that was Long Beach, and we'll post these stats up so everybody can see them. We're going to move into the 605 corridor. Also 10 to 100 units. There was a total of 11 transactions for about $92 million, and the average price per unit was $277,000 per unit and $368 a square foot. So the price per units were pretty close. They were like $2,000
apart.
Yeah.
So that was a pretty good average there. Within Long Beach and the 605 corridor, on average, was about a 4 cap that traded. And those were the stats that took place, and we just kind of want to dive in and get your perspective both on the market. Just in general, we have all talked about interest rates. What's going on with the market is mainly just rates, right? And there's been a lot of people that are locking in rates ahead of time because they feel like the rates are going to be higher. Has that changed the market at all in Long Beach, Trey?
Yeah, I mean, we're still seeing how it's going to change the market. I would be honest right now, just, on the phones, it has slowed down a little bit. It's definitely playing with the buyer's psyche, if you will, just as to, the motivation and how driven they are to get deals done. But with that said, they are starting to sharpen their pencils and making sure that they're looking at the deals a little bit closer rather than maybe when we were seeing, interest rates sub 3.5, where buyers were very eager to just get deals tied up because those interest rates are so low. Now they're starting to, again, sharpen their pencils, make sure that the returns are there, and they're not really, for lack of better words, screwing themselves over, getting locked up into a deal with maybe 2021 pricing with these new higher interest rates today.
Got it. So buyers are aware of it. They're pricing it in, but they're still doing deals. I mean, there's still plenty of transactions going down.
Yeah, transactions are still going down. Again, the interest rates, recently are just starting to creep up. So we haven't seen it take full effect into the market yet. But my guess is still with, supply being so restricted that it's more likely than not, if anything, it might just level itself off and the average price per unit. I don't see any dips taking place. But again, I don't have a crystal ball. So we'll see what happens at the end of Q2.
Sean, what are you seeing in the 605 corridor?
Yeah, I would say very similar to what Trey mentioned as far as, maybe there's just some buyers taking a little bit of a pause and, just looking at it to where like, okay, I'm borrowing at 4.25. So maybe if the seller's rents are extremely low, if you're trying to look at a 3 cap, it might not pencil as well as it did, a few months ago when rates were, in the low 3s. So I would say those deals, where the rents are lower might cause a little bit more of a pause from the buyer. But overall, if you're in a good part of, North Downey or Uptown Whittier, I feel like buyers are still wanting to be in that area and trying to make the numbers work.
Yeah, that makes sense. I mean, we as brokers within the market, you guys have been very active within the respective markets, especially in Long Beach. We had a 20% market share just in Q1, so hats off to you, Trey, for leading the charge on that. But we, as brokers within the market, need to make sure that the buyers get the most competitive financing within the marketplace too. And not all banks and financial institutions are equal with where their rates are. It's kind of all over the place. You got agency financing that's at this current time, the mid 4s. You got some bank financing that's still in the high 3s. And you just got to, not every bank's going to lend on every deal. You got to make sure it's the right fit for the right borrower and the right deal. But I think now more than ever, having good broker debt relationships, knowing the right banks within the market is very, very important.
100%.
Because that can make the deal.
Absolutely.
Yeah.
Okay, so buyer demand's still there. It's just people are sharpening their pencil to make sure these new rates, how does that correlate to their cash flow?
Yeah.
And then they want to make sure they're borrowing right around where the cap rate is. Unless there's some great deal story to it, it might be a little tough.
Yeah, I mean, to that point, I mean, I think where buyers are still eager to get deals done is just what's going on in the rental market. I mean, we're still at historical low vacancy rates, so that's, really driving renters' demand to just go higher and higher. So I think that's leaving buyers confident in still doing deals where interest rates may be a little bit higher than the going in cap, knowing that in end of year one, year two, year three, it's going to catch up in the 3.8 cap that they bought. It's going to look like a 5 cap very quickly.
Yeah, that makes sense. I mean, debt's kind of like just overcome the market. Everybody's talking about it. Are you hearing anything else besides interest rates are higher? What else are you hearing in the marketplace?
Yeah, I mean, we're just seeing, so we have that 62 unit in Downey that we listed, and it's a great asset, great part of Downey. It's, the rents are a little bit low going in, but we're still seeing buyers still trying to make that work, because of the asset and the quality of the location that you're in Downey. So we still feel like there's a will, on the buyer's part to try to make the numbers work, especially on the great assets. Other than that, I mean, it's still, there's we're seeing velocity out there, some buildings out in the market that buyers are kind of circling. Maybe they're not under contract yet because they came up with a higher price. They went out with a higher price, but now the buyers are trying to make it work. So still seeing some activity there.
I would say, I mean, really right now too, just in terms of, a landlord that's holding on to their buildings, I'm hearing a lot of excitement with CPI coming in. And especially now, there's going to be a lot of runway where, everybody's going to be able to max out their rents per AB 1482 to about 10%. So that's got a lot of people excited, I think, as landlords, knowing that they can really increase their rent rolls. And then also the buyers coming in, knowing that as long as rent increases didn't take place in the last 12 months, they could really max out those going in caps, maybe a little bit more than where they're seeing it when they purchase it.
Yeah, we could model out a higher potential on the rent growth, and that's a great story. To that point, that is exciting as a landlord, but to that point, are you hearing from investors any more concerns about further regulation? It's hard to, no crystal ball, it's hard to guess, but is that a big conversation within the market right now? Because now we can raise rents as landlords potentially higher, we shall see, soon. Are people more worried that we're going to be back to more regulation?
I mean, unfortunately, it's a you never know type scenario because just the nature of politics in California, not to go in the weeds on that, but it seems like everybody in politics is throwing the kitchen sink and everything else at all landlords. So unfortunately, yes, more likely than not, that's weighing into buyer psyches and seller psyche, or just landlords in general in the marketplace. But with that said, it's just backed by palm trees, sunshine, and the ocean. There's just so much demand out here. So I don't know. It's tough to really hang your hat on that.
Yeah. Just to kind of piggyback off that, I would say, I mean, like Santa Ana just implemented the rent control. Andrew, I, and the team, we're all helping, an investor that wants to get out of Santa Ana because of those regulations, and he's trading into a 10-unit building in Whittier, all single story, and he's improving his building and the unit count, and some can argue the area, and kind of getting away from that rent control. He thinks is a little bit safer and incorporated part of Whittier. So I could see kind of some movement from that end too.
And then people are buying in Santa Ana thinking it's great because you're buying in Orange County. You still got to, even though there's a lot of rent control there, some people are coming out of LA, for example, saying, this is fine. I can live with this. So it all depends on what that investor is looking for in their criteria and what they're comfortable with. So yeah, I agree. I mean, they're not building any more apartment real estate on the workforce side to compete with the rent levels that, are being offered. So we're seeing rents grow, and it's been a good, stable asset. And even though rates are higher, they're still lower than they were on average. I remember back in the first quarter of 2019, rates were 4.5, maybe 4.75, and you know, it was still a pretty good time to, you know, lock in financing. Maybe some people were smart and went with floating rates, and it worked out. But you know, 4%, 4.25, you know, is still historically low. So it's just it's adjusting from, you know, the 3-cap deals. And again, if you've got the right story, like the 62 units that we're listing within Downey, that's a good sized building on a great street, and those don't come around very often, and there's a great story to that property. Maybe, you know, that's why we're getting a lot of demand on that, even with the low cap rate.
Exactly. Yeah.
Well, thank you so much for the update. I know the investors really appreciate it. We'll put your contact information below in case anybody wants to reach out, talk about the specific markets that you're in, and we'll keep putting out these videos. Thanks so much for watching, and we'll see you on the next one.